Hey friends, my name is Sahil and this is my Personal Finance Academy. In September 21, this company has made a loss of 4,442 crore and in last 12 months, the combined loss was 13,391 crore. Yet, every brokerage house is bullish on this stock. In fact, even the promoters have increased their stake in this company. And the big bull, Mr. Rakesh Jhunjhunwala, is betting big time on this stock. Can you guess the name of this stock? Well, I'm talking about Tata Motors. In Q2 result of September 21, Tata Motor has posted a net loss of 4,442 crore. It has a total debt of 1.48 lakh crore and debt to equity of 3.33 and return on equity of minus 22.9%. Tata Motor share price stand from levels of Rs 600 in 2015 to levels of Rs 65 in March 20. Yes, a fall of almost 90% in share price between 2015 and 2020. Now with such financials, Tata Motor looks like a fundamentally weak company, isn't it? Yet, every brokerage house is bullish on this stock. In fact, this stock has recovered from the lows of 65 rupees to current levels of 500 and giving 650% return in last 1.5 years. In spite of such a sharp rally, all brokerage houses are bullish on this stock. I just had a quick look on the brokerage houses and ICICI Security has put a target of 646 rupees on Tata Motor. Prabhudas Leeladhar has target of 592 rupees. Yes Securities has put a target of 546 rupees. Sharekhan has put a target of 610 rupees on Tata Motors. In fact, even the American firm Jefferies is bullish on Tata Motor and set a target of 625 plus. So I did the quick research to understand why every brokerage house is bullish on Tata Motors. In fact, there is also a confusion about Tata Motor and Tata Motor DVR shares. So I'll first cover the difference between Tata Motor and Tata Motor DVR shares and then investigate the reason for bullishness towards Tata Motors. By the way, before we even get started, I saw a few comments where people mentioned that they sometimes miss my videos. So if you don't want to miss my latest videos, you can press the bell icon so that you can get the notification as soon as I launch the video. And I recently published a video on top 4 companies of Tata Group leading the electric vehicle revolution. If you haven't watched this video, then please watch it. Alright, let's get started with this video. You might have noticed that Tata Motor has got two types of shares, Tata Motor and Tata Motor DVR. So why do we have two shares of Tata Motor and which one should you buy? So basically, the key difference between Tata Motor and Tata Motor DVR share is that Tata Motor DVR shares are differential voting right shares of Tata Motors. So this DVR stands for differential voting rights. So there's no major difference between both the shares. In fact, you can look at their financials and both have the same financials. Although the market cap and share price movement of Tata Motor and Tata Motor DVR is different. So in 2008, Tata Motor introduced Tata Motor DVR where DVR shareholders has only 10% of voting rights as compared to ordinary shareholders. If any resolution is put to vote on a poll or by postal ballot at any general meeting of shareholders, the shareholder of DVR shares shall be entitled to one vote for every 10 DVR shares held. Now, if you're thinking that you have never voted for any such resolution, then generally we as retail investors do not vote for such resolution. Although you always get the email to join the general meeting and vote for resolution, but we always ignore it. However, it is useful for institutional investors that invest a large chunk of money so that they can get a right to vote against any wrong decision. Now, why would anyone buy DVR shares? Well, in order to compensate for the lower voting rights, DVR shareholders get an additional 5% dividend. For example, if the dividend per share is Rs 20, then shareholders will get Rs 21 dividend. So that's a 5% additional dividend. Now I hope you understand the difference between ordinary Tata Motor shares and Tata Motor DVR shares. Now if you look at the market cap, Tata Motor has a market cap of around 1.8 lakh crore, whereas Tata Motor DVR has a market cap of around 13,000 crore. The reason is that as on FY21, there are 332 crore ordinary shares of Tata Motor and 50.8 crore DVR shares of face value Rs 2 per share. Hence, due to lower numbers of shares of DVR, it has lower market cap. And of course, the market cap also depends upon the share price. So Tata Motor DVR is trading at lower levels as compared to Tata Motor shares. Hence, due to both lower shares and lower stock price, Tata Motor DVR market cap is much lower than Tata Motors. Now, if you look at the share price movement between Tata Motor and Tata Motor DVR, both move in correlation with each other. It means if Tata Motor is increasing, then Tata Motor DVR will also increase. If Tata Motor will fall, then Tata Motor DVR will also fall. However, interestingly, Tata Motor DVR has jumped more than Tata Motor in last 1 year. For example, in last 1 year, Tata Motor share has generated around 250% return and Tata Motor DVR has generated around 400% return. The reason being that Tata Motor DVR was trading at higher discount to Tata Motors. So generally, DVR is not that popular in India. However, in US market, DVR shares trades around 10 to 15% discount to their original shares. But currently, Tata Motor DVR is available at almost 45% discount to Tata Motor ordinary shares. So in spite of a sharp jump in DVR shares as compared to ordinary shares, DVR is looking more attractive as compared to Tata Motor. Established in 1945, Tata Motor is among the world's leading manufacturer of automobiles. It offers a diverse portfolio of cars, SUVs, trucks, buses, defense vehicles to the world. Just to give you an idea of scale of Tata Motors, Maruti Suzuki has larger share of around 45 to 50% in Indian passenger vehicle category. However, in last 12 months, Maruti closed a total revenue of 85,833 crore. In comparison, Tata Motor last 12 month revenue is 2,92,067 crore. That's almost 4 times the revenue of Maruti. Now you can imagine the size of Tata Motors. The period between 2015 to 20 had been difficult for Tata Motors where its shares tanked almost 90%. However, after COVID, Tata Motor has rallied almost 650% and still brokerage houses are bullish on this stock. So let us look at the reason for the bullishness. Now number one reason is Tata Motor is leading the electric vehicle car in passenger vehicle segment. There is no doubt about the fact that the future of automobile is electric. And Tata Motor has been the leader in the Indian electric vehicle passenger segment so far with almost 70% market share. It launched Nexon and Tigor and both cars have received a very good response. Just to give you an idea, recently Sahil Chandra, who is the president of Tata Motor passenger vehicle, said that we are getting a monthly order of around 3,000 to 3,500 cars, but we are only able to supply 1,000 cars a month. Recently, Tata Motor has announced that it is lining up investment in the tunes of 15,000 crore just for electric cars and planning to launch 10 new electric cars in the next 4 years. It has also received investment from private equity firm TPG Rise Climate that has invested $1 billion in Tata Motor passenger electric vehicle division at valuation of $9.1 billion. In fact, Tata Motor has already announced that its luxury vehicle segment Jaguar would become completely electric by 2025 and Land Rover car range would become fully electric by 2030. There is already a long waiting period for Tata Motor electric cars. Currently, the electric car contributes around 5% in total sales and the company expects electric cars to contribute 20% in the next 4 to 5 years. In short, the future prospects are looking very bright. Second reason is improving financials. Over the last few years, Tata Motor has struggled financially with wide losses and negative cash flow and high debts. However, the financials are now improving. In fact, there was recent news that for the first time in last 10 years, Tata Motor has generated more operating profit per car than Maruti Suzuki, which is the leader in passenger vehicle category. Tata Motor operating profit per car stood at Rs 45,810 in Q2, which is double that of Maruti cars. Tata Motor passenger vehicle division operating margin rose 5.2%, which is a gain of 110 basis points in the second quarter of FY22, while operating margin of Maruti fell 50 basis points to 4.2%. Due to strong demand for Tata Motor cars, the financials are expected to improve further. Although there was an acute shortage of chip supply and due to that, the waiting period of cars has gone up which has also impacted the profitability. However, once the chip shortage problem gets resolved, it would again improve the financials. Number 3 reason is Tata Motor has safest vehicles. Not only the electric vehicle segment, but Tata Motor is getting high demand across passenger vehicle segment. Tata Motor cars are top rated in terms of safety. Tata Motor has recently launched a new subcompact SUV Punch starting at rupees 5.49 lakh rupees. So Tata Punch has been rated among the safest vehicle in India with 5-star and 4-star rating respectively from adult and child occupant protection on NCAP standards. Tata Motor said on the auspicious day of Dhanteras, our deliveries nearly doubled as compared to last year, owing to strong demand for our new Forever range, including the newly launched Punch and the new EVs. So in this video, we discuss the reason why every brokerage house is bullish on Tata Motors. In spite of having a loss of 13,591 crore in last 12 months and total debt of 1.48 lakh crore, majority of brokerage houses are bullish on this stock. Even the top investors like Rakesh Jhunjhunwala are bullish on this stock, and promoters of Tata Motor, that is Tata Sons, have increased shareholding from 37.27% to 46.41% in last 12 quarters. The top 3 reasons I could understand for bullishness towards Tata Motor is mainly because it is leading the electric vehicle revolution in India with a strong market share, then its financials are improving, and there is a high demand for Tata Motor cars with strong order book that would continue to drive the future growth. Although I believe that it is a long journey for Tata Motors and the stock has already rallied a lot in last 1 year. So invest carefully. Now tell me in the comments, do you hold Tata Motors in your portfolio? And are you bullish or bearish on this stock? I hope you will find this analysis useful. If you want to learn more about money management, you can explore my online course and join 7,000 plus enrolled learners. I will see you in next video. Till then, take care.